Some good news now for Netflix. Shares in the online video streaming service have surged after some better than expected results.
This after it added more new subscribers than forecasted over its last quarter during what management describes as an aggressive push into nearly every market except China. And even there, it's now exploring ways to launch the service.
The good news, though, doesn't seem to have spread across the social media industry. Twitter shares have tanked after it suffered its longest ever technical glitch, triggering renewed questions about the strategy of its recently returned boss, Jack Dorsey.
And anyone involved in digital media will be horrified to learn that an estimated 200 million mobile users are now using some kind of ad-blocking software, threatening the revenue streams of many content creators who rely on advertising. It's estimated to be costing the industry nearly $10 billion.
Well, social media commentator and employment lawyer at Bertram Turner Bell, Kevin Poulter, joins us now in the studio. Thanks for coming in to us, Kevin. What does Netflix seem to be doing so right?
Well, it's doing a few things. The international expansion, obviously, is doing well for itself. The subscription model seems to be working in the sense that it can continue to fund this original content. But it's not all good news. Actually, profits have been down in the last quarter, and the share price is down 124% on where it was this time last year. So it's not all good, but on the horizon, certainly, it seems like they're doing everything to build their growth, to expand their growth.
It's actual users that are so often looked on by the markets as the most important marker of how well a company's doing, rather than profitability, isn't it? That's
right, and the US still its core market, but actually growth there was below forecasts and has suffered. We could be getting to the stage of absolute saturation.
Peak
of course.
Netflix in America.
Yeah, that's
but
right.
Not elsewhere, I guess, is the key thing.
This is new markets. The difficulty is that they're trying to appeal to the international businessman, the international traveller, but every country you go to has a different subscription package. So you might start watching a series in one country and then take it to somewhere else, such as one of the 130 new countries and jurisdictions that it's moved into, and you can't see it. It's only got 10% of the content that might be accessible in the US, say. Big issue.
So I mean, positive news for Netflix, but also, as you said, profits down, still tough times. So how has it been able to afford this big push it's made in terms of TV production of late?
The subscription model works well for it. And by offering new services and certainly new programming, it's giving something which is exclusive, which you can't get anywhere else, and people keep paying the subscription. People don't exhaust it. I think that's the key thing. There's always something to look forward to, something on the horizon.
Let's talk about Twitter. There was a big service outage yesterday, wasn't there? The longest in history, and it's kind of got investors thinking about it again and saying, what is Twitter actually doing to kind of reshape itself for the future? That's right, and again, a 52-week low on the share price. It was 7% down, I think, yesterday alone. Not necessarily as a consequence of this, but certainly it's had some impact. The problem for Twitter is that people go to it every minute of the day to get their news, to stay in touch with friends, just to find out what's going on and to interact. If you can't do that, what's it there for? So this outage has been a big issue. It's a temporary outage. I mean, everyone forgives somebody a temporary glitch. That's right, and Twitter used to be plagued by these outages. If people remember the fail whale that used to come up and say, sorry, we're down at the moment. It's been a thing that's actually not been very regular for the last couple of years, 3 years. Something like this has a big impact. It is a global issue now, and it's affecting business. It's affecting ad revenues. It's affecting the content partners that Twitter's now having and using. And it's saying, well, is there another way? Should we be looking at something else? That's had an immediate impact, I think, on the share price. So let's talk a little bit about ad blocking now. What's caused the push towards this software? I think people are just fed up. Consumers are sick of seeing, you may have visited this site. Are you interested in frequently something you're not interested in? And it becomes distracting. And actually, to the other extreme of that is that people actually don't see it, particularly the new generation that are coming through. They look to what they're looking for, the content typically, and don't see anything else. Now, we talked about Netflix, we've talked about Twitter. Netflix doesn't have adverts.
famously.
Need it. It's got ad subscriptions. Though.
That's right.
The thing with so many of these ads is they're becoming so much more invasive. I mean, you talk about people not seeing them. Sometimes I'll click on a news article on a mobile app I use, and suddenly up pops an ad, and there's like a countdown, a 10-second countdown before I can get rid of it because I'm so not interested in what that ad has to say. So how can we, surely there has to be a more subtle way of getting the message across without annoying me.
I think that's right, and I think that's the real challenge. And as much as we have sort of ad techs, creatives looking for ways around the ad blocking software, there's always a constant sort of ping pong between the two. And I think, unfortunately, for many of us, the ad technology is going to succeed where the ad blocking software fails.
Kevin Poulter, our favourite social media man, thank you very much for coming in to talk to us again.